What's going on, beautiful traders? This is your boy Adrian back with another video. And in this video, we're going to look at trade management. That's right, trade management. What do we do once we've placed that trade? Once we've hit that buy or sell button? Do we just move our stops to break even right away? Do we close out the trade once we're in blue? Do we get up and walk away from our trading system once we're in the trade? How do we manage our trade? What do we do? Thankfully, in this video, I'm gonna go over 4 ways or 4 different methods on how to manage your trade once you're in it, right? So I want you to sit back, take out your pen and notepad, take some notes, but first, I want you to smash the like button, right? Subscribe, only if you want to, of course, and show your boy some love down in the comments below, right? Without any further ado, let's jump into the trading system for the trading charts and see what we can learn together, all right? Now, here we are in the trading chart, okay? We're looking at a currency pair, USD CAD, as an example. And the very first method that we're gonna look at is set and forget. I'm sure many of you or some of you have heard of this method, set and forget. A very popular Forex YouTube trader coined this phrase, set and forget. Now, with set and forget, it's as simple as the name sounds. You set the trade, you place it, and you forget about it. You just get up and you walk away. You do nothing. Now, I've added a little extra flair to it simply by setting alerts. So we know once we've, exited the trade either on the take profit side or on the stop loss side. So how does that look? Let's see. All right, we're looking to take this buy entry right here. Once we place our trade, okay, we move over to the right with the plus arrow right here, and we set our stop loss alert, which will be right here. Now, unfortunately, in the replay mode, we're not able to set that, right? So for the example of this method here, I'll just simply draw a trend line right here, and I'm just going to change this trend line to stop loss. Imagine that with this stop loss, the alert has been set. Now, we're looking to target this high right here, okay? So with that, we're gonna do our trend line again. We're gonna set our take profit alert, all right? Now, we've placed a trade, we've set our alerts, so we've set now, and now we just forget by simply letting the trade do its thing. Okay, and as we can see, the trade has hit our target profit, setting off our alert. So now, most likely, we'll check our phone that we got that notification that the trade has played out in our favor, which is a great thing. So this is an example of set and forget, where you simply just place a trade, set your alerts, and you forget about it. Walk away. Go live your life, right? If you have to go to school, you have to go to work, you have to go to the gym, go do that, because the trades are already been set. The trade has already been set. So go do your thing. This method is most likely, I would say it's ideal for, swing traders. It's ideal for day traders, maybe not so ideal for scalpers, right? That's just my personal take on it. I could be wrong. I'm just a guy on, I'm just a guy on the internet giving, my 2 cents, if you will, right? So that's the first method, which is set and forget. Let's look at method number 2. Now, in this method, we move our stops to break even, okay? We can do this in several different ways. We can do it where our trade has ran a 1-to-1 risk to reward. We can do it once our trade has ran 10 or 20 or 30 pips into profit. We can do it once the trade has, created a new structure into the market. It's all personal preference, but this is the methodology behind moving stops to break even. Looking at this now, we're looking to take a sell entry on this trade here. Stops above this zone, okay? And in this example, I'm going to actually move the stop loss to break even once we've ran a 1-to-1. So once we've ran right here, 1-to-1, my stops will move to break even. And let's see how that looks. Okay. So now our trade is 1-to-1. From here, I'm just going to, extend the risk to reward tool down to our take profit. And then we're going to add our stop loss at break even. the benefit of doing this is that now our trade is risk-free. We've moved one-to-one, we are now in some good profits, and now we can just walk away and live life, or we can just monitor the trade at the trading station, however you want to actually monitor. But at this point, in this methodology, we are now moving the stops to break even, and this trade is now risk-free. All the risk is off the table, right? So let's see how it plays out. And as we can see, price moves actually, price goes right back to our entry point, stops us out at break even, which right here, this is a good trade. It's a good trade in the sense that your capital is still alive for another day, right? Let's see what would have happened though if we did not move our stops to break even. We would have gotten stopped out, just wicked out by the hair. Now, if you're risking 1%, 2%, 0.5%, 3%, that loss would have set you back by the percentage that you risk on that trade. So by moving your stops to break even, you're actually covering your butt, if you will, covering your capital, making sure that you have enough capital still alive in the game. You still have skin in the game to place another trade, either on the same day or on a different trading day. So second method, moving your stop loss to break even. Let's take a look at the third method. All right, so here we are. This is the third example here. Now this example is where we trail our stops, and simply we can trail it based on the structure being created in the market. So if we're in a bullish position, we can trail our stops under each higher low. If we're in a bearish position, we can trail our stops under each lower high. Alternatively, you can also trail your stops based on how many pips price has moved away each time. Maybe you trail it every 10 or 20 or even 30 pips. It's entirely up to you. I'd recommend structure because structure is king. Market structure, of course, right? So looking at this setup here, we're in it for a buy. And then let's play out this to see how it moves. So in this example, I'll be moving it based on the structure being created. So we're going to be moving it under each higher low that's being created in the market. All right, so we see price has broken this high right here. Now, what we want to do based on price breaking that high, we want to wait for price to create a higher low. Then we'll move our stops to first break even underneath this structure right here. Okay, so price has created a new higher low. Now this was actually pretty scary, and the reason why I say that is because it looked like price, for instance, here we are at entry, price shot up 120 pips. Truthfully, that is great profit. Secure that profit if that happens, right? But again, this is just for the example of this video, okay? Now, once price has created that new higher low, we can then move our stop to break even under the structural low right here. And the reason why we want to do this is that price can easily come back down, just essentially wick. Price can wick below these lows right here, maybe come all the way here. So by putting our stops underneath our structure low, our first structure low, we are essentially giving the trade room to breathe, right? So once price creates another higher low, then we move our stops under here. So let's see what price does. Okay, so here's the break, all right? And let's see where price creates the low. Beautiful. Here's the low, here's the higher low. So we'll move our stops here. Now, even though price is all the way up there, essentially we have what, a 4.7 risk to reward floating right now. And let's say, for instance, price were to come all the way down and stop us out at a 1.1 basically. This is still a positive win, a positive trade, because this helps with your psyche in terms of knowing that you're following your plan, moving your stops under each structural low. Now, again, if this is, the real world example or real world live trade happening, secure profits, and we'll talk about that in one of the next methods, right? So here we are, price is creating that new high, making that new higher low. Let's see what happens here. Price is doing its thing. All right, look, we have a break right here. Price is starting to form a higher low point. We can move our stops here. All right, let's see what happens now. Price goes all the way, hits our TP. We can even move our stops right here because just before smashing through our TP, price created a little structure right here. I would say this is more so on a minor structure, created a higher low. If we pull our tool all the way over, we see that we've hit our TP, we've managed our trade effectively, whereby giving our trade room to breathe, giving the trade its time and place to play out, right? So looking at the flow of the market, we have an impulse, correction, impulse, correction, and then a continuation. That'll be for a different video, right? But that's the flow of the market, where we've moved our stops each time to the higher low point, right? Moved it here, and we moved it here, and then we just moved it here lastly based on the minor structure that played out here. But this is another example, example number 3 in terms of how to manage your trade effectively by just trailing your stops under or above each structural higher low or structural lower high. Let's take a look at the last example, which we will be taking partials. Okay, so here we are on the last example where we'll be looking at doing partials. Now that is where we would either take 10, 20, 25, 75% of the profits off the table and thereafter move our stops to break even. And that is actually, an amazing way to effectively manage your trade, because not only are you taking profits off the table, you're securing the bag, you're also moving your stops to break even, making that trade completely risk-free and really and truly making it a win-win, right? So let's take a look at this example and how it's done effectively, right? So we're taking our sell position on this trade here, right? And we're gonna draw out our stop loss tool right here. Boom. All right, so our stops are right here right now, okay? Now, we can take profit, again, based on pips or based on structure. I always like to do structure because, again, structure is king. You got it, right? So let's do this right here. Let's play this out. Once price creates a lower high, I am then going to move my stops to break even and then secure some partials. So let's see what price does. All right, so we can see here that price created a lower low. All right, I want price to pull back now and create a lower high, which it does right here. So we're gonna move stops to break even, and we're gonna use this little line tool here as our partial tool. So we've taken partials right here. We've taken maybe 10% off. We've taken maybe 50% off. Again, it's all personal preference. Let's just take off 25%, right? And let's see what happens here. Okay, so again, price is creating structure. Again, now we can move the partials here, take off some partials, and what happens again? Let's see. Again, price creating structure this looks to be on a lower time frame. So if we head down to the 15-minute time frame, we can see it clearly now. Here we are. You can see it very clearly. Price is creating structure on the lower time frame where we can take partials along the way, right? And then price eventually hits our TP. Let me see if it smashes it. But here we are. We are officially taken out of the trade. But what you can do as well, gotten this far, and you are literally 4 pips away from your overall TP, close out the trade altogether. That's another, effective trade management. Don't sit idly by or even eagerly by, looking at the screen, waiting for price to smash through your TP. Sometimes it doesn't happen. Sometimes you'll come into a situation like this where literally 4 pips, even 1 pip away, price does not hit your TP. You see it reverse all the way back to entry. You've lost all the profits. With a method like this, not only, again, are you securing profits, but you're also bringing your stops to break even. And now it's risk-free, right? You can go home. I mean, if you're already home, you're home. You can, get up and go do whatever you gotta do, pay a phone bill because you just now made some money in the markets to go pay the phone bill. So win-win, right? But again, if you're 4 pips, 5 pips, 10 pips away, 1 pip away, close out the trade, secure the profits, right? Secure the bag. Guys, that was 4 tips, 4 methodologies for trade management. Let me know in the comments below which one you think is the most effective, which one do you use, and if there was one that I didn't mention, let me know. Teach me as well. You know what I'm saying? Show me some love in the comment. Listen, that's it. That's all I got for you. All right? If you like this video, I want you to smash the like button, show your boy some love, subscribe only if you want to, and leave me a comment down below. I would really, really, really appreciate it. Thank you so much for tuning in. As I always say, speak truth and speak life. Your boy's out.